Good evening, friends, and what a year 2023 was. Why am I saying was, even though 31st has not come? Because market is not going to trade in 2023. Today was the last trading day for 2023, and what a rally. When I did very similar presentation last year, same time, mood was really very, very bad. In fact, it's sad. Why? Because the market was continuously going down. And many people thought that what happened in 2022, will continue in 2023. It turned out to be a great year for the investors. I can't really recollect, or I would be doubtful that in 2023, any investor would not have made money. Whether investor in gold made money, investor in Bitcoin made money, investor in real estate made money, investor in equity market made money. Global equity did well. Overall, I'm saying so. There will be some markets which may not have done well. But I think almost each and every assets class created wealth. This is despite the fact that in January 2023, the World Bank came out with a report says that world economy will have recession. And then we had an episode of Adani Group. Then after a couple of months, we had, not couple of months, the next month or so, SVB Bank, Silicon Valley Bank, the Signature Bank collapse, and completely lost confidence of the investors. And when you rewind and when you fast forward, when you see those events that took place, which we are difficult to remember now, and yet we did extremely well, I think it speaks a lot about the investors' optimism, investors' risk-taking capacity, and investors' faith in the riskier assets class. So I'm going to summarize a lot of data points in this presentation just to give a flair of what happened in 2023. And of course, we'll open the floor for question answer. I know you must be waiting for Mohit to join this webinar. Unfortunately, some urgency had to come, and Mohit will not be part of this webinar. So Mohit has sincerely apologized that he could not make it to this. So please excuse him because something urgent, which was not scheduled in his calendar, came up. So before I begin, just a disclaimer that this webinar is only for an education purpose. Please consult your financial advisor before buying, selling a stock, any stock. Whenever you invest in the equity market, it does carry a little higher amount of risk, and past performance is no indicator of future returns. Now let's look at this here. This is out and out year for mid and small cap. Why? Because market to chala overall. The Sensex gave 18% return, but 48% return given by small cap and 45% return given by the mid cap. Now that shows the kind of, and if you remember, we correctly predicted the year 2023 would be year for mid and small cap, and that's exactly what the market has turned out to be. And I think if you had not taken exposure to mid and small cap, the probability is very high that your portfolio would not have seen the kind of jump which overall investors would have seen in their in their portfolio. Now the biggest question that comes to mind: will this rally continue or not? And for that, we are doing exclusive webinar on Wednesday. So some of you people must have started writing, what is your view now? 2023 to chala gaya, 2024 mein kya? So we are going to address that. So this webinar is not for that. This webinar is just to summarize what happened the year that has just ended today, to get an idea. So clear cut, mid and small cap did extremely well. if you look at, I think this was again the year for the PSU index. If you look at it, the PSU index did extremely well, whether we like it or not. Like, if you look at the CPC and PSE, Nifty really did well. It's come as a big surprise despite the housing load are at the elevated level, and yet reality did well. So sometimes, we draw a conclusion कि ये होगा तो ये होगा. But in real life, that does not necessarily that is going to happen. Another classical example, when China lifted that restriction because of COVID, everyone thought that there will be a revenge buying and revenge shopping and revenge travel and so, and that should spoil the growth. But that did not happen. In fact, it was a very muted opening. You can say post-opening, there was a muted kind of a movement that happened in China because of. So sometimes, what looks logical in the market is not going to happen the way we think actually. And PSU I think if anyone made more money in this market, it is Government of India that made more money in this market. I again repeat, if anyone has made more money in this market, it is Government of India who made more money. Why? Because PSU companies did extremely well, and I'm going to present that in my business house in this slide only, which business house saw what kind of wealth creation in 2023. While reality did well, so is the case with auto sector. Now both are a rate sensitive sector, and yet they did extremely well. While PSU Bank is up by 32% for the full year, the bank Nifty is at the bottom of the table, 12.3. Okay, normally that never used to happen. Normally you would say Bank Nifty doing much better as compared to the PSU Bank. For a change, PSU Bank did extremely well. And Nifty Finance also struggled to report gain. Overall, I think each and every indices, the major indices close in the green. And I think that's a very big takeaway of 2023. Now let's look at what happened to the Nifty 50 company. Only one company within the Nifty 50 which doubled the money. 101%, that's Tata Motors. But if you look at the list, whether it's a Tata Motors, whether it's a Bajaj Auto, whether it's a Hero MotoCorp, the list is dominated by the auto sector. Adani Enterprise, despite overall market up by 18%, Adani Enterprise lost 26%, which is a part of Nifty 50, and United Phosphorus down by 18%. Now, I distinctly recollect UPL was one of the best buy for many of the broking firm in the beginning of 2023. And that's why I keep saying your stock selection is a very paramount importance. How many of you basically had Tata Motors in their portfolio, or Bajaj Auto, or NTPC, or Larsen Toubro, or Coal India, Hero MotoCorp, Ultratech, Power Grid, LTI, Mindtree, and Tata Consumer? How many? If I have to look at my own portfolio, I would have Tata Motors, yes. I would have L&T, yes. I would have Hero MotoCorp, yes. 3, and I would have Ultratech Cement. 4 companies there in my personal portfolio out of top 4. We did. In fact, if you remember, we did very similar. We did one webinar in October 2021, and that time Mohit and I were there, and we discussed about, and I did mention at that point of time, Tata Motors looks very promising story, and that it turned out to be one of the best performing company. Within top 500, again, there are surprises. Who would have thought that BSE could go up by 308%? In fact, no one would have recommended BSE in the beginning of the 2000. So is the case with Jindal, Suzlon, REC, Kens Technology, PFC. Again, you can see a lot of company from the. There are some company from the government PSUs, but these are not very usual suspect that you would believe that they would do very, very well for the year, and that's what surprises, While in Nifty 50 we saw best return from Tata Motors 101%. In case of BSE, in case of 500, there are quite a few companies. In fact, all top 10 companies have given more than 100% return, which shows the power when the market does extremely well. And you look at on this side, that's on the right hand side, Adani Group basically is dominating the list with a topmost decline. Tata total gains down by 73%, Energy Solution 60%, Wilmar 43%, and Adani Enterprises 26%. Even Delta Corp, which was once a darling of the investors, while the market moved up, it's down by 21%. It's very, very critical for everyone else to understand that even if the market does well, you may not do well if you have a wrong stock selection. And that's exactly this data shows. As I was saying in my beginning of this webinar, that each and every assets class made money. But if you look at, and I've not put real estate because real estate is more of a micro market, but overall market give BSE finance give 24% return, debt give about 8% return, and gold is up by 11%. This data is not as of 15th December, it's wrong actually, I have not updated it. This data is as of yesterday, so it's been this one. So equity clearly outperformed the other competing assets class. Real estate would be about 6 and 7% throughout the country. If I take the average, it would be about 6 to 7%. That's why I keep saying that if you are going to borrow housing loan at 8.5% and your assets are going to increase only by 6.5%, every year you are losing 2% by investing in real estate. Don't get confused real estate as an investment and real estate for the self-consumption. When it's for self-consumption, then you don't have to bother about it. Why? Because you are going to consume that assets. But if you're looking at that as an investment point of view, I think it's turning out to be a poor and poor assets class. While, for a change, Nasdaq did extremely well. 45% return. Now, Nasdaq that consists of some of the large tech companies given very similar returns to what Indian small cap gets given. So look at the contrast that happened there. Dow underperformed the Indian market while Dow is up by 13%, Nifty is up by 20% and Sensex is up by 19%. So Indian market did well, but not as good as the US market. Now that brings a very important question. Should you at all invest in other markets? And if you look at, even though the India did not do as much well as MSCI World Market, purely driven by, if you look at the YTD return or YTD return 12.2 and this one, this data is as of November 2023 because this data gets updated on MSCI India website, MSCI.com website only at the end of the year. So this data is basically as of November. But if you look at the China, when I look at the data, I was really surprised. The MSCI China index for last 10 years in dollar terms is only 0.08 return. This is the same country which was supposed to be the growth engine for the world. And when you look at the 10 years period, the return is only 0.8%. In 2023, this is YTD actually, minus 9%. That is till November, which clearly MSCI emerging markets, of course, a lot of need to go because of higher weightage. China has in emerging markets was up by only 6.1%. In other words, India did 2x of MSCI emerging markets. MSCI World did extremely well purely because of US did extremely well, and that's the reason. But the moment you look at the expanded time horizon for 10 years period, in dollar terms, again I repeat the word dollar terms, India gave 9.6% return Indian market, while MSCI World gave 8.9% return, which clearly gives an idea. In a short term, we may not, even if you look at the 3 years, I think India did extremely well, 13.2, 7.6, 5 year 10.4, 10.5, very almost similar. The probability is very, very high that if you are invested even in dollar terms, the reason I'm harping on the word dollar terms, because some of our customers are also analyzed and they need to look at this data in a very, very close manner and see how India has been. This despite so much challenges India has to face. Why? In last 10 years, we had demon, we had great virus crisis, we have faulty implementation of GST and so on and so forth, and yet India did extremely well as compared to the global market. Rupee have shown some amount of strength, and in fact, if you ask me, I had predicted that rupee should strengthen against the dollar, but that did not happen. Rupee marginally down as compared to US dollar 0.4%. That's the marginal decline as compared to what. But Again, Turkish lira 57% up. Against Russian ruble 24%. Against Japanese yen 4.3% versus Chinese yuan 0.7%. And I think euro is where India basically seen maximum depreciation of 5.1%. Even British pound almost at the same level what it was there in the beginning of 2023. I think what is going to happen going forward, I think we don't expect too much depreciation of rupee happening going forward. In fact, there is a high probability that we can also see an appreciation happening in the currency purely because of India has been settling a lot of import with different currency or local currency, and that could reduce the demand for the dollar. But of course, we'll discuss some other day on that. Bitcoin 16,000 say 42,000. Up and up, and which clearly suggests, that risk-on strategy was the name of the game in 2023. And someone has said nicely, and some latter part of that, only the rising tide will lift all the boats. When the tide subsides, we will come to know who was swimming naked. And I think something similar has happened in 2020. Everything went up and up. We need to wait and watch what happens when the tide turns on a downside. How many people are able to swim in a very effective manner? When I mean to say swim effective manner, how many people are able to basically control their emotions and able to take a right decision when the tide turns? IPO market extremely robust, but that looks very, very robust purely because of the last quarter. That activity took extremely high. But if you look at compared with the last year, while the last year we saw 62,000 crore being raised through IPO market, this year it was only 52,000 crore. In other words, there's a decline in terms of the IPO money that has been there. What has come as a surprise to this, the best listing gain came from a company that tapped in the last quarter, that is Tata Technology, 163% gain, listing gain. And the highest gain from the issue price after listing is IREDA, 202%. Total 59 companies tapped the market, 47 listed at the premium. And I think that's a very good data. And stock which are still trading above the issue price is 55. In other words, had you invested in IPO market, I think probability is very high that you would have made money. You would not have lost money by investing in the IPO market. India's inflation is down then as compared to what it was there in January 2020. From 6.5% till November, we are at 5.6%. The only cause of concern is that last month it increased from 4.9% to 5.6%, and when the data will come for the month of December, we should expect higher inflation. But overall, I think it's more or less, that 7.4%, which was little scary, it started coming down and it's basically comfortable situation. But we'll discuss more about the inflation on our Wednesday webinar. IBI monetary policy, they met 6 times in a year. Only in February, they did 0.25 rate hike. And then everywhere it has been status quo. And I think that's what, purely because of that inflation will should come under control, number one. And number two, to give some fillip to the economy, because further rate hike would have been detrimental for the growth in the economy. Because the global uncertainty is very, very high. Who made the maximum money? As I was saying, Government of India. You look at 40% growth in the market cap from end of 2022 to the end of 2023. Tata Group made 32% gain. Mukesh Ambani Group made only 3% gain. But HDFC again 39.7%. Adani, we all know, lost almost 29% market cap, despite overall market did extremely well. L&T as a group did 58.2%. I think that did extremely well. Even the parent L&T, which you must have seen in my this one, they did extremely well in 2023. Purely because of the capital goods, the sentiment really improved. ICICI as a group was looking very, very promising, but I think they remained a little subdued and was up by only 14.7%. So Reliance and ICICI have been little group as a laggard in 2023. India is doing extremely well. So if you look at this data, TTM 12 months, that is trailing 12 months, as of September 2023 versus September 2022. And if you look at it, the net profit grew by 23% and the top line grew by 10%. I think that's really a commendable job because there was a lot of global uncertainty. And during this uncertain time, India showed a lot of characters and did extremely well. Again, this was a year to keep seeing the rise in the market cap constant, and the best hike came from 337 to 365 lakh crore in the month of December purely because of IPO and very good sentiment in the secondary market. Overall advance decline ratio was 3:1 for the full year. In other words, for every one side decline, 3 companies advanced. That is 75% company advanced in 2023, only 25% company decline. It will be very, very pure bad luck. You can say that you have only got that 25% of the company which declined. Most of the investors made very good money in 2023. Then I think the first 3 months has been a little disaster for the market. But since then, the advance decline ratio has been continuously remain above 1 for the rest of the year. FPI, out of 12 months, 4 months they were declined. They were net outflow we saw. But overall, they invested 1.71 lakh crore. Our prediction for the full year was 1 lakh crore. When we made it, I think they surprised us positively with very, very heavy inflow. And most of the heavy lifting was done in the month of December. Why? Because 66 lakh crore came only in the month of December. Normally, that used to be the yearly inflow from FII, but they did extremely well, 1.71 lakh crore. Sector where FII basically put more money purely, if you look at the increase in the assets, auto and auto component, they put almost 54% increase. Capital goods, they invested 104. But among the big money, because the highest exposure they have is into financial services. So their total assets increased by 22%. That also includes fresh inflow plus mark to market. But it does not translate into index returns. Why? Because index only moved up at 13%. In IT also, they pump in more money, 19% now increase that we have seen. And that could also be function of mark to market plus inflow. And index gave 24% return. Oil and gas and consumer fuels, they were down. They reduced the stake. But index gave 14%. But auto clearly has been the flavor and the most favorite or darling of the FIS in 2023. And so is the case with capital goods. Overall, I think FI has been, more or less their investment in top 5 sectors almost remain the same. So that's what has happened with the FIS. Mutual fund, retail investors like you and me did extremely well. They basically put net investment of near about 1.5 lakh crore, 1.45 lakh crore, which is really good numbers. Domestic institutions pumped in 1.68 lakh crore, much little lesser than what FI put in 2023. Why? Because FI put it 1.71 lakh crore, while domestic institutional investors put only 1.68 lakh crore. My sense is that some of these domestic institutional investors are taking a cash call on their portfolio, and they due to that, we don't see that robust inflow coming into the market. India exports and imports, it has been a little challenging here, to be honest with you, on the export front. So we started with 65 billion, and then we did going down to 59 billion till in the month of July. And why? Because of the global uncertainty, and then suddenly we started seeing some increase happening. But overall, it was not a great year for the exports. Somewhere imports has remained under control purely because of India's smart strategy to import crude from the Russia. Now, event this year that sparked the moment panic but proved to be short-lived. Let me start with the somewhere in March we saw this Silicon Valley Bank collapsing. But this happened on the back of Adani Group coming under scrutiny of the regulator. But look at this: within 37 days, it recovered what we call whatever been lost because of this crisis happening in India, that's been recovered by 37 days. And that's a very good message that everyone I want to tell you that there could be challenges that could come. if the challenge does not have a very long-lasting impact, then use that challenge as a buying opportunity rather than getting out of the market. My request would be that. Why? Because we need to learn from the history, and if we don't learn, then we need to blame ourselves if we are not able to create the wealth. So, in fact, if you look at it, Silicon Valley gave a very beautiful opportunity for investors to make money. So remember, when crisis comes, it comes with an opportunity. Okay, I again repeat, when the crisis comes in the equity market, it comes with an opportunity. And hence, when the crisis comes, lap it up with both the hands. Don't basically let the crisis go west. And that's what my request, but that's not a one example. If you look at this Israel-Hamas, what we call conflict, and you can see that it basically, within 1 month, market started gaining that, regain that loss, whatever happened. And again, if you had invested somewhere in October and remain invested, you would have made good money by today. So again, whether it's a Silicon Valley Bank, whether it's a Israel-Hamas conflict, it gave a very good kind of a opportunity for the investors. The reason I'm hyping again on that, please use that, do not let go crisis. Use that crisis that is happening in the market to increase your allocation of the equity. Why? Because you will make up. Someone who did in March 2020 when COVID hit us would have made a lot of money. So point after it, Evergrande issue, same thing. There was some scare for medium small cap because when VSE came out with the circular in 2021, again that was a scare, and use that as an opportunity to make money. Another thing is that normally the Israel-Hamas conflict would have basically created a problem in terms of crude oil prices. And if you look at this crude oil price, instead of going up, it did move up, but then it started falling now. So in other words, again, the assumption that if the market, the crude oil price will go up if the flare happens, that did not happen. So again, we need to somewhere learn and don't come to conclusion because it's happened in the past, it's going to happen in the future. Unlikely. We need to look at some other data points and other parameters to make a very meaningful this one. Adani Group did face a lot of pressure on 23rd January, 19 lakh crore market cap, which then came down to only 9 lakh crore, more than 50%. And then, of course, it started recovering a little bit till September, but I think in the last quarter, it really jumped from 10 lakh crore to 14 lakh crore. That's, I think, basically really helped. But Adani Group, again, second, the investors' conference in the Indian market. A lot of people had a fear that Indian market may not do well because the big corporate company coming under pressure, group coming under pressure, there could be a corporate governance issue, and people may tend to move out of Indian equity market because citing the corporate governance issue with the listed entity. But that did not happen that way. So again, there's a learning for us. Just to summarize, then why did Indian market did better this? Why Indian market did better this year? There are a couple of reasons. I think one, that we really have a very strong leadership at the center. There are continuous reforms that's happening, and that's another reason why Indian market did. Strong earnings growth. I think that we have seen that India Inc. and the commentary from India Inc. has continuously remained robust despite global uncertainty. No one talked about scaling down their business, so they are saying that business is challenging and we need to really look at it, or we'll basically put on hold our capex. I don't think that happened with most of the corporate. Huge liquidity. So when as you know that there are two deadly combinations. When you have a growth in earnings and liquidity, if that both get combined, you can make super duper returns. And something similar happened this year. Growth in earnings, huge liquidity, both from domestic as well as the institutional investors made FI taken the Nifty and the small Nifty and the Sensex to the all-time high. Am I right? Then again, ease of inflation. While 2022 was a year of higher inflation, in 2023 could be considered as a year where the inflation started cooling off. And due to that, the central banks across the world decided to be very, very cautious of whether they should hike rate of interest or not. And the last but not the least, I think the risk-on strategy came back very strongly. And I think that's really is the basic factor why our Nasdaq did well, why Bitcoin did well, and why mid and small cap outperform the large cap. See, if you look at this data, and unfortunately I did not go on in detail, but if you look at this data, the highest amount that we got it from the in the mutual fund industry came in the March, 20,534 crore. It was not an easy month for the market. Why? Because market sentiment was down because of Silicon Valley Bank. What this data clearly suggests, and if you look at this 15,000 crore, it's not a small amount, am I right? And so this 3 months, the market was really down at that point of time. And our Indian investors almost invested in about 50,000 crore through mutual fund, retail investors. That shows the maturity of the investors. So they did not use the downside of the market to go out of the market. On the contrary, they put in more money, thinking very clearly and rightly so. Okay, this is giving us an opportunity rather than moving out of the market. So again, my request to all of you, market will keep giving you situation like Silicon Valley Bank, situation like Israel Hamas episode, this situation like Adani Group episode. These are all the episode. These are for you to buy, not to get out of the market. That's the biggest learning that I would say all of you need to learn from 2023. With this, let's open the floor for question and answer. Subramaniam sir is saying, please start on a few intraday recognition. Of course, these are 3 with positive bias and 3 with a negative outlook. This will definitely help us with your extensive data. I mean, this should be a cakewalk for you. Subramaniam sir, thanks for your suggestion. We do have trading80.com on our website. Please use that. It's not for the intraday, I must tell you that. See, the reason why we are a little cautious of not venturing into intraday, it comes with the high risk and high return. Now, and sometimes, we are having a not very uniform client base, am I right? And if there is a high probability that you will end up losing money. So I am not a very big fan of intraday trading. But anyway, since your suggestion is there, I'll pass on to my colleague, Karan Batra, because that's his domain where he'll be able to do that. I run the PMS business. In PMS business, we don't do any intraday call. Praful Gala, best wishes to Mohit, Sunil, and entire market. Are you planning for a model portfolio of Mojo One stocks? Answer is yes. I think Mohit is working on that. We should be able to come out with that. I think the best person to answer, unfortunately Mohit is not there today, but he's the best person to answer. Maybe you can ask Karan and he'll be able to tell you that. Update on InfinHub platform, I think we are working on that. Mohit is working on that along with the complete tech team, and very soon you could see some kind of a movement there. Thanks for your hand-holding and teaching us along the way, sir. Our pleasure. Appreciate. Happy New Year to entire Mojo team. Happy New Year to you and everyone. Of course, we are going to come back to you in 2024. That's why I'm not saying Happy New Year. But anyway, thanks, sir, in advance for wishing us Happy New Year. Reena, how would you predict for stock market if after general election the majority of BJP government does not come to power? So, Reena ji, I think I'm going to cover this topic and of course we'll discuss on our Wednesday webinar where I'll show you some data, I'll show you some analysis, and then I'll show you what can happen, what will not happen, and so on and so forth. So please wait for that Wednesday, 7 p.m. Am I right, Amir? We have kept it. And then that webinar is for 2 hours, of 7 to 9. Why? Because we are going to make a very extensive presentation, and post that we'll have very extensive question and answer. So please block your calendar, 7 on 3rd January, 7 to 9 p.m. Frank says, hi Sunil, rule bull makes money, bear makes money, and pigs get slaughtered. How does it apply to own it, don't trade it stocks? You take on this statement, please. Your take on this statement. So, how does it apply to own it and do not trade it stocks? So I don't know, sir. To be honest with you, I don't know how to respond to this question, to be honest with you. You are right. Bull makes money, bear makes money, but so bull makes accumulate the funds, over a longer period of time. Bear takes away in a no time. So basically, bear has a very short window, but it could be very successful window for the bear operator. Pigs normally get slaughtered. That is true. How does it apply to own it, don't trade it stocks? See, as I said, trading, which someone asked, Subramaniam sir asked, and I said, definitely does not make sense. In fact, he talks about intraday. In fact, I would not suggest intraday. Forget about the couple of week short-term trade also. I would not recommend that because it normally turn out to be a loss. But buy and hold it forever, I don't think it's a great strategy to do it. Why? Because normally we have seen market की हवा बदल जाती है, then it becomes a frustrating for you. And other day I've shown you example of HDFC Bank. I've shown you example of Bajaj Finance. I've shown example of Avenue Supermarts. I've shown example of Delta Corp. They have been significantly underperformer for a longer period of time. So own it and don't trade it. I would say own it as long as the fundamental remains the same. But don't trade it 100%. Don't trade it. Bala sir, thanks for session. The data said by you. You said the data on BSE was a whole price, it was interesting. May I request you to please share BSE growth versus gold price over a period of say last 10 years, please? Yes, sir, we can definitely do that. That's not a problem. Maybe I'll try to cover that in my equity outlook 2024. I'll try to cover that. But I think I've seen some data, if my memory serves me right, I think in almost similar kind of returns. I think I think the equity gave little higher returns as compared to gold over a period of 10 years or so. But I'll get the data because I may be wrong. My memory may be not be serving me right. But more or less, but see, there's interesting data which I was going through that, which suggests that the downside when you invest in gold is little low as compared to the equity market purely because of the fluctuation. So risk versus adjusted, gold seems to have done better in last 10 years or so. But remember, I always suggest you one thing. You should never invest in gold because of your view on the gold. You should invest in the gold because it gives a lot of shock absorbing capacity to your portfolio. So as a part of good asset allocation strategy, you should keep 15 to 20% in a gold, irrespective of whatever the view you may have. And that's way you can basically create some stability to your overall portfolio. Sanjay is saying, what is your thought on investing in PMS at this point of time when the market is at all-time high? See, it's all function of what is your time horizon. If your time horizon is 3 to 5 years, don't try to time the market. My worry is that when the market, assume that your fear is that since it's an all-time high, market may correct. If market correct ho bhi gaya, will you have a guts to invest at that point of time in the market? तभी तो आप बोलोगे और नीचे जाएगा. I'll give you a classical example of PMS. One gentleman decided not to do it in the month of October because of Israel-Hamas conflict. क्या हुआ? He was repenting today. So, point is that if you're coming for 3 to 5 years, please go ahead and invest. अगर आपका पैसा equity में से equity है, it's all the more reason you should invest because you can't exit 100% from the equity market. Am I right? Now you said, okay, I have some money coming in from the other assets class and I want to invest in equity. Maybe then, let's say this question becomes valid and I've tried to cover that point, Sanjay ji, in my Wednesday webinar. So I'll try to give you that reply also, what one should do if you were to invest right now in PMS. Vinay is saying, what do you mean by risk on and risk off strategy? सर हमारी लाइट घर पे कैसे ऑन एंड ऑफ होती है ना. लाइट्स ऑन मतलब लाइट आ गई घर में, लाइट ऑफ मतलब अंधेरा हो गया. रिस्क ऑन मतलब यू आर विलिंग टू टेक मोर रिस्क एंड हेंस योर रिस्क appetite is more. Risk off is that you want to play little safe. So what you do, you don't invest in the risky assets class. Then you play safe with what maybe gold, maybe debt instruments, and so on and so forth, because that perceived to be more safe as compared to asset class equity or cryptocurrency. So that's what mean as risk on and risk off. When is risk on, that means people ability to put more money in equity market goes up. When is risk off, people take out the money from the equity market and put and shift to the debt instruments. Which sector companies expect to show good results in Q3? Can we see revival in metal sector? Uh, I think it should be a mixed bag. That's what my sense. And which sector will do well in Q3? So we can discuss some other day. I think today is not a good occasion to discuss that because result season will start, as you rightly say. Result season, I'll try to cover next week, if possible, which sectors are looking more promising in Q3. But today, I don't think is a day to discuss that. Do you still predict correction to 20,000 in near future Nifty? Pandey sir, this was my prediction was 20,100 for the December 2023. Unfortunately, market overshoot. I thought market will give returns in early teens, but it has given 19-20% return. So I think market has surprised me positively on the upside. How would the market will behave in 2024? Pandey sir, I'll come in front of you on Wednesday and I'll share that data. In fact, I've done a lot of research on that and I've done some of the data which I'll give you. It will be a really eye-opener. Anjali is asking, is headquarters shifted to UAE? You are right, ma'am. It has been shifted to UAE. Whether our Samsung, our GDP numbers include, exclude unorganized sector or case economy or black money which exists in real estate transfer or red side. Yes, sir. So, one which is a black component may not get included, but unorganized sector, maybe yes. I think what government is doing, with Paytm and other thing, I think is all coming back into the system in a way, one way or another way. So yes, logically our GDP will be much bigger than what has been published by the government data, but the gap between the reported GDP and unreported the actual GDP, the gap is getting more and more narrow because of GST, because of UPI and so on and so forth. So more and more people are coming into the normal business structure. I understand that some of the real estate transactions are happening in cash, but somewhere that money must be going. So that leakage is not as big as it used to be there maybe 1 decade back. So I think now that started reflecting, and see one of the reason why we are seeing a lot of growth in the tax collection purely because of a lot of compliances coming into play, and that compliance is helping us to report growth in the earnings for the taxes. Precisely, 500 companies like BA6 are shown in the webinar which rose more than 100%, but none of them in our Mojo stock list. What can be the reason for this? So we do own one company that we talk about 100% in our Mojo PMS. See, the reason why it cannot be a Mojo stock because the quality of that company, Tata Motors, was average. An average company cannot be a Mojo stock. So that's the reason why it did not was not a part of that. And you say BSE 500 companies like BSE are shown in the webinar. I think BSE was never a Mojo stock. I'm not very sure. Let me just see. It was not because of the quality is average. So, to become a what we call Mojo stock, the quality has to be good or excellent. So that's the reason why it did not become. So some of the companies that you saw, they don't have which I've shown in BSE 500 are not best performing. Are best performing are not part of Mojo stock because they were average quality company or below that, and they cannot become a Mojo stock. See, this was again I said. This rally which has happened in 2020 was driven by the risk-on strategy where a lot of momentum came into play, and that really helped some of the companies to do extremely well on the market. Again, Sarang is saying, what is your view on the markets more regarding PSU stocks and Adani stock? I have not seen any of the above two categories on top Mojo stock. Don't you feel we missed out on big rallies in above two? So not really, sir. Adani Group, I agree with you, but Adani Group, if you look at it, YTD, they are still down. It's not that they are up. So in fact, we avoided rightly so. Others, you would have come and asked me, why did you invest in those? Because we are losing money, underperforming. Am I right? And I've shown you the data that how they are within BSE 500. The group, Adani Group is basically dominating. And if you look at for the full year, while the overall each and every business house saw that market kept increasing, Adani Group declined. So that's one. So I think you've been saved in that sense. It's not part of the list. PSU stocks, that I don't agree with you. We were owning PSU banks, some of the railway companies, PSU railway companies, some of the PSU defense stocks. That if you go the best performing stock of the month for 2023 is nothing but the PSU company. Just to jog your memory and remember, make you aware about that. We had recommended in May 2020 Garden Rich, which is a PSU company, up by 78% since then. So in 9 months, not 9 months, almost 7 months, it's up by 78%, which is a PSU company. So I don't think we missed out on that. But some of the normal other suspects, we may not have done it because of the quality, maybe because of it does not fit into our what we call buying system, and that's why. But Adani Group we stayed away, and it will really help you. And PSU stocks, it's unfair to say that we stayed away from that. PSU banks we were holding, some of the defense stocks we were holding, and we still hold, and some of the railway stocks within the defense space or within the PSU space that we are owning. So I don't think we missed out there. Tushar is saying, please keep budget special Mojo webinar week to gain from macro capital allocation. So we always do it. On the day of budget, I'll be in front of you and explain you what is an implication of budget, what are the highlights of the budget, and how you should navigate the market. But remember, this time would be a water on account budget. It will not be a full-fledged budget. The next government will come, and the next government will have to make the full-fledged budget. This will be more of a water and account budget. So don't expect any major news or major announcement that's going to come in this budget. Is there a growth expected in the mining sector next year? That's what the Logeswaran sir is asking. There is a talk about some mining auction and so any information on this. So yes, government is talking about mining auction. I think one thing which has been happening is that government want to be more and more self-dependent, and that's one of the reasons why mining auctions are taking place. What will happen, how it will happen, what is a growth expected, it's little early to say. And we don't have a pure big mining company except Coal India, which if my memory serves me right. We don't have any clear-cut mining company, just the only mining and no value addition to that. Because there are some certain companies which they do mining and then they do all some value addition also, like some of the steel companies, some of the aluminum companies and so on and so forth. But I don't think, except Coal India, there is a pure play mining company in India. So, and one company should not be the sector where one can take a view on that. If I want to invest significant amount, should we wait? Sir, my request would be Wednesday को आप आ जाइए, मैं आपको clear cut answer दूंगा उसका. In fact, we look at various possibility, what can happen, what are the positive triggers, what are negative triggers, what are neutral triggers for 2024. So I'll just, sir, 3 दिन की बात है. Wednesday, I'll be in front of you. Prabhakar saying, your premium amount is 50 lakhs. Is that right? Yes, sir. If you are an Infinity customer or you are a MarketsMojo customer, 50 lakhs is right. Vikram is saying, as you highlighted, there have been many Nifty 500. Why MarketsMojo portals could not identify such stock at any early stage? More has delivered in line with the index returns only. Even if it is delivered in line with the index returns, I think it's a good way because there are a lot of momentum stocks moved up, which is not backed by the fundamental as per se. I'm not saying all the companies, but there are many of them, and hence they really will get sustained or not is a big question mark in those counters. So as I was saying, that in the bull market, when there's a high tide, every bot gets lifted. Only when the tide subside, we'll come to know who was swimming naked. So I think we need to wait and watch. As and when the tide turns, we'll come to know, because ultimately the quality has to perform somewhere. And our Mojo stock has to have a good quality or excellent quality. So some of the company that we mentioned don't have that high quality as per our quality parameters. Like one example, BSE, which I was saying, having an average quality, which cannot become a Mojo stock. Vaidyanathan sir is saying, could you please share the PPT to members, sir? What would you do with that PPT, sir? We don't share the PPT. We only share our PPT to our PMS members when we do exclusive PMS webinar. I'm afraid, sir, I will not be able to accept your request. Bharat is asking, what is a cash call? What is a cash call is that they are trying to time the market. So you have a view on the market, and based on that view, you decide, okay, I will not invest right now, but I'll remain seated in the case. That's what the cash call is, nothing but. That's a cash call. You have a view, and hence you decide choose not to invest in the market. Many times this kind of decision have proved very, very costly for the fund manager. Why? Because you take a cash call on the market, and market start move up very significantly, and then you keep waiting for the market to correct, and then you underperform very, very significantly. So most of the time, many fund managers decide as a strategy not to take any cash calls. Maybe you may underperform for some time, so be it, but don't take cash calls on the market. Despite you may have a strong opinion on the market going down. Okay, Sunilji, I'm holding model portfolio since 2.5 years. Nifty and all index I have. VS is 30% CAGR of versus minus just for. Manishji, I'm a little surprised if that's true, because I would request, it's a very good case study for us also. If you are, and I hope you are doing this model portfolio of 2.5 years without any additional investment. Otherwise, what would happen if you are doing additional investment? Then we can't take point-to-point return. Then we need to look at this one. But if you have not done any additional investment in your model portfolio for 2.5 years, and yet your portfolio is just up by 4%, it's a big surprise. My request would be, please share that case study to Karan Batra, and we will definitely look into it, because that's a very, what we are saying, I don't think anyone else has complained on the similar. On the contrary, I have received so many messages that their portfolio did extremely well in model portfolio, which are 1 year and more than 1 year old. If you're in your case 2.5 years and it's not done well, it comes as a big surprise. I think there is something which is a missing link, and I don't know what is that. We'll definitely like to study your portfolios, Manishji, and would like to understand why that has happened. And just please WhatsApp me that, Manish sir, what we call this one. Please forward it to Karan Batra, please. Vipul is saying, please guide us what strategy you use for profit booking. Sir, are you saying in our PMS, we do have in our PMS profit booking trigger, and we look at how much the company moves up. And then after moving that certain percentage, if it starts falling, we decide to book profit. We don't want to keep waiting for the company to keep falling. And that is various threshold at various bucket level that we have put in, just to ensure that we don't get out too early. At the same time, we don't get out too late also. So I know you may have more questions about market and other things, but in the interest of the time, I think we need to conclude this webinar here itself. My advice to all of you, please enjoy your 31st night. But please do not do drink and drive. Be sensible of the surroundings that you are in, and have a wonderful weekend, and enjoy last 2 or 3 nights of 2023. I'll again come in front of you in 2024 with more interesting data, more interesting analysis, and more interesting equity outlook. I thoroughly enjoyed my interaction with you, which I have been doing from last couple of years. I'm looking forward to that kind of an interaction even in 2024. Thanks a lot for everyone for giving love and support in our journey, and I'm looking forward for everyone's love and support even in 2024. With this, good night, take care.